Stocks are volatile. In fact, all investments are subject to volatility, some more than others. In 2016, the seismic activity within the stock market in particular has been extremely concerning to those watching the charts. But let's zoom out and take notice of basic facts without getting technical. Actual employed individuals are getting lower as the layoffs continue. The only jobs that are being created are low-paying and/or temporary. Exports are falling, particularly as the dollar strengthens, and the solutions which are being implemented today are the same solutions provided to us in 2009. Print money, relax the lending standards, and keep as much activity off the balance sheets as possible. Welcome to the new world. You came here for the truth, so let me unveil that for you. Let's get into stocks falling as the economy hits a new low, showing you their propaganda once again. Let's start with this article here. Layoffs surge in January to the highest level since July as employers in the retail and energy sectors pulled out the pink slips. So they're laying off people, no surprise here. This is always happening. They're always laying people off. But where it gets a little tricky is the fact that they hire them back. Now, the way that they skew these, and I've talked about it before, I'm sure many of you know, is simply that they hire temporary workers. So these temporary workers lose their jobs because they were hired for, let's say, 30 days. They lose their job, but then they apply again and they get another temporary job. But the statistics don't show that that was the same person who lost his job a few days prior. No, they count it as a job gain. If you were to calculate it, I'm sure there would be billions of people having jobs here. That's how ridiculous the statistics are. It doesn't make any sense. If you keep laying those people off and then rehire them 30 days later, that's not a new job. That's a guy who was unemployed before and now has a little bit of work again today, but will be laid off again. They get into more details here, but basically highlighting the fact that two big ones are Walmart and Macy's having to close locations. Walmart obviously being a big one, 269 stores. So if Walmarts are closing down, that means a less total amount of goods are being purchased. And that would mean that the countries exporting them, let's say China, for example, are going to be feeling it as well. So it has a ripple effect. Don't just look at the things at face value. You need to understand the ripple effect. Very important. Let's move on to this here. As you look at U.S. equities falling on Friday as mixed, U.S. employment data raised concerns that the Federal Reserve may raise rates this year. How many people believe that the Fed will raise rates? Of course, it took years and years and years to get them to go up a minuscule amount. And I've talked about it before, how it was 0 to 0.25 previously, and now it's 0.25 to 0.50. So the actual rate of increase may not even go up at any given time. So something to note. They also do say in this article here that we have achieved a great goal, and that is an unemployment rate of 4.9%. That is wonderful, and I believe that the money GPS is completely successful. We can close down everything here, and I can get a trophy and everything else because we're here. It's the end. It's over. We've reached full employment. Congratulations, everyone. Everything is awesome. Well, of course, that's not the truth, because the people who are ending up on these silly statistics, the ones that show you that beyond 1 year they're not accounted as, as unemployed, what does that mean? Actually, the situation is getting worse. So this is something to look at. Let's look here. This is the first time that the unemployment rate has dipped below 5% in almost 8 years. This is Barack Obama, Emperor Obama, saying this. He's saying Americans are working. All told, over the past years, our businesses have added 14 million. He says new jobs, but that's not the case. 71 straight months of private sector job growth extends the longest streak on record. I mean, he's obviously correct because he is the emperor, and whatever he says is the truth, even when it's lying. That we should just bow down and accept that whatever he says is the truth. That's my suggestion to everybody. Not look into the details for yourself, but just take the leader's word for it, and he will guide everyone to a better future. Certainly more in this article here talking about the Federal Reserve interest rate hike, making a big deal about it, but of course it's not going to be a big deal until they get to some serious levels of interest, and that's, let's just say, beyond 1%. The dollar is falling sharply, which I don't agree with that, while the market bets ever more confidently that there will be no rate increases from the Fed in 2016. This is driven by a rising belief that the US could be slipping into a recession this year, a possibility that only a few weeks ago was regarded as negligible. I love to read this, and sometimes you may hear me stutter, you may hear me struggle to find words. It's because instinctively I know that I'm reading something that's not truthful. So I have to sort of backpedal in the middle of sentences and try to tell myself that I'm just reading a paragraph. It's not true. That's why you find me sort of stopping in the middle and having to tell you that this is in fact sarcasm the way I see it. Just in this one paragraph alone is jumping all over the page. I can't keep focused on it. The dollar's falling sharply when last week you could read how the dollar is rising and rising. So what is it? Is it falling sharply? Is it this trading day it's falling sharply? Was that yesterday? Was that over the past week? It's very confusing. And then it says that there will be no rate increases in 2016. Well, what is it? Who's saying that? Is it the Federal Reserve saying that? Is it the analysts that were completely wrong every single time for 9 years? And then basically saying that they could be slipping into a recession. Well, that's already the case. It's so obvious to look at. It's silly. It's silly to read this. And please understand that when I'm frustrated like this, it's because of the propaganda. It's so obvious to see. Let's get into this here. The nation's trade deficit rose 2.7% in December as exports fell again, capping the first year since 2009 in which U.S. exports have declined. Now, the exports declining in part has to do with the strong dollar. It's obviously a factor. When you look at, let's just take my example here, Canadians purchasing from the US. It has become significantly more expensive. And then you also have to just realize the ripple effect here is that a strong US dollar, when you have commodities priced in US dollars, everything becomes more expensive. We have to pay for food here, obviously, and things are definitely more expensive. When you don't have the growing season in the wintertime for many commodities, that you're going to have a problem because you're going to have to import them from other countries. So you're going to have to pay that exchange rate, and that takes effect in the price of goods. And you may be feeling the same thing in the countries that you're from. If you are, please let me know down below. Of course, I would definitely like to hear about that. And just to interject for just a quick moment here, I want your perspective on everything that I talk about. I actually care what you talk about. That's how I develop my perspective, is from hearing from people from literally all corners of the world. I've received emails and correspondence from literally all corners of the world, and it's so amazing to hear people's stories. And unfortunately, many of them are not good stories, but that's how I piece together my point of view. So I do appreciate everything that you write on here. I do read it. There's more into here, and they're talking about the specifics, but it's there for you should you choose to. This right here is the magical formula, which is having some struggle right now. And it's from my book, The Diagram, where we see the US and China, but let's just say China being the developing nations. And they have this scheme that's been going on. The US gives these IOUs or bonds to countries like China, and then countries like China give products, real goods, to the US. It seems to be changing over these years. Of course, China still holds mass quantities of US debt, so let's not, kid ourselves here. But the trend is changing. And we could see the currency swap agreements that have taken place. There's a lot going on right now that's not being discussed. Speaking of China, what we have here is the Chicago Stock Exchange said a Chinese investor group agreed to acquire it, giving the buyer entry into the intensely competitive U.S. equity market. I do believe this is serious because you have major assets, let's call them assets, whether that's land or real estate or businesses or in this case stock exchanges, being purchased by foreign investors, particularly those from China. It's just an interesting way to think about the future, let's say 20, 30 years from now, when your country is primarily owned by foreign investors. They can sway things in a certain way where you could have now, today, for example, JP Morgan and Goldman Sachs swaying the financial industry. You could have foreign investment companies swaying things in their direction. So no longer will they be supportive of your particular nation, not that they really are, but let's take it with a grain of salt for a moment. They could be helping out foreign countries instead, first and foremost. So it's something to think about. Japan's volcano not far from the nuclear power plant erupts. Now, all I'm going to say about this is, obviously we have Fukushima being a big disaster still going on today, still encountering this meltdown that is occurring, spilling out radioactive waste into the ocean, into the air, everywhere, basically. Every method or mode that it's able to melt down or erupt or however you want to call it, it's become a big disaster for the world, still going on today, not being looked at. Then you have this. You have these volcanoes built near nuclear power plants. I'm not a nuclear expert. I don't understand, all the scientific things that go along with this. But why would you put a nuclear plant next to a volcano? That's all I want to suggest. This is absolutely ridiculous. You don't need to be a genius to figure that out. And then last but not least, just wanted to show you this. In Greece, tear gas fired on 50,000 protesters. Mass protests will take place in every major city around the world. They're fighting against austerity, but it doesn't matter. It can be against anything. People will be rioting because they're upset. Upset about food prices being too high, upset about losing their pension funds. It doesn't matter. People are going to be rioting on the streets. I assure you this is going to take place in every major city around the world. We've seen it taking place in areas like London and Brussels and everywhere else. So keep your eyes on this. It's very, very crucial. If you found this video informative, please give me a thumbs up. And of course, if you found the video informative, you'll definitely find my book, The Money GPS, even more informative. So if you go over to Amazon, they have this look inside feature, and it's going to allow you to flip through the pages of the book and see if you like it. Take care.